Right as we move past the Labor Day weekend right here in Calgary, which marks the move of us going from summer into the fall season now, that has also changed things in the Calgary real estate market. We have started winding down the amount of activity that we are seeing in terms of new listings and sales. Both are changing on a month to month basis and coming down as we wind down for the year into fall and winter season for the Calgary real estate market. However, one thing that has been consistent this year is that there is no one single blanket statement or sentiment for the entire market. And that is because different parts of the market, different segments, different communities are behaving differently. And that's what this real estate market report is about. Because while we are seeing a slowdown overall when it comes to sales or even new listings and the amount of inventory left for each segment of the market, certain parts of the market are still seeing a lot of activity because those are the ones that provide a lot of value for the dollar right now and still attract a lot of buyers. Another thing that I'm seeing personally in my business is that a lot of buyers that were watching the news over the past 6 months and watching the Calgary real estate market correct in prices are now slowly starting to come off the sidelines as they always had the intention to want to enter the Calgary real estate market and need to make that move and purchase that property, whether it's for their family or because where their schools, where the kids go to school. But what's changing right now is that they are finally getting into the market to see where those opportunities lie and how they can plan ahead for the next 3, 6, and 9 months to start and plan their move. And so that is where the big shift, I think, really is happening. I'm more and more seeing buyers come off the sidelines versus indecisive buyers who are already in the market still continue to wait. Before we get started, I have to call out two guides that I provide in the description of this video. One is a community guide and one is a buyer guide, both extremely valuable if you're looking at the Calgary real estate market, whether you're looking to just move across communities or you're looking to move to this beautiful city. The community guide specifically is the one that gets a lot of raving reviews and is very, very well received. And the reason for that is because it goes beyond just stats and numbers and prices and property types. It really goes into a vibe check of what the community provides and what you can expect for you, your family, and your kids in terms of amenities and everything else that a community is really is made up of. So definitely get those. The QR codes are right here. Very easy to scan. You'll get them straight on your phone, and I look forward to helping you in the Calgary real estate market. Also, if you're looking to buy or sell in the Calgary real estate market in the next 3, 6, or 9 months, here's a QR code to the consultation call that I offer. It's a 1-hour consultation call that goes into all the details based on your personal situation, your short-term, mid-term, long-term goals, because there's no one solution that fits everyone. And I always encourage people to reach out as early as possible. That way we are able to make a more tailored approach, decide the game plan for what's going to be best for you, when's the best time to enter the market, and what's the best product type, because there's a lot of assumptions, wrong information out there, and I would love to help you and provide you that right information so that you can get into the market with a lot more confidence and approach this decision, which is going to be one of the biggest you will ever make, with a lot of confidence in the market. So definitely reach out and I would love to have that call with you. Now, without further ado, let's get right into the market report. So let's get started by the summary by the Calgary Real Estate Board. And this goes over all property types and overall what's happening in Calgary and gives you a good understanding of the sentiment that what you can expect getting into the market right now. So overall, price declines are still mostly driven by higher density homes. And what does that mean? Higher density homes is essentially your townhomes and apartments, primarily apartments. So right here you can see improving supply choice has actually changed the dynamics of the Calgary market, driving price declines over the past several months. Higher price and adjustments are occurring for apartments and row style properties, while detached and semi-detached properties have actually reported just modest declines. So the properties that are getting the most affected right now are primarily the row style and apartment homes. Price adjustments in the detached, semi-detached markets range from modest price growth in some areas to larger price declines in areas with large supply growth. So since we have a lot of new housing and new construction coming to the market right now, a lot of those areas will face oversupply and surrounding neighborhoods will face the brunt of it versus inner neighborhoods that necessarily don't have that supply coming in next door, still don't have to compete with that level of supply and are facing better price adjustments because of the overall demand. So overall, recent price adjustments have not offset all the gains that occurred over the past several years yet. And this is something that I will show you at the end of my video, and it will give you perspective on, despite all the headlines and everything that we are seeing in the Calgary real estate market right now, what is the real impact in terms of the overall gains that we actually saw in the past couple of years and how much people are really getting affected. Now, moving on, new listings remain elevated, keeping the sales to new listings ratio below 60% and pushing inventory to 6,661, which is the highest August amount since 2019. So more inventory choice coupled with lower sales has caused the months of supply to rise to 3.4 months, which is an increase, of course, from last month, much higher than the seller's market conditions reported over previous 4 years, but still well below the buyer market conditions observed prior to the pandemic. So prior to the pandemic, we had a huge buyer market phase of about 6 years, and we are still significantly below that in terms of the amount of competition that we need for properties to sell. Of course, we are more in a balanced market right now, and so both buyers and sellers, depending on how you price a property, which community you're in, and what property type you own, will have different advantages or disadvantages. Here is the benchmark pricing for by property type and the total residential. So as you can see, the total residential benchmark price is now at $577,200, which is a modest decline month over month. We are seeing about $3,000 if you average it for the last 4 or 5 months, which has brought us to this point. Month over month, however, from this month to last month, it's a decline of $5,700. For detached, we are at $755,600, and month over month, that's a decline of $6,200. Now, year over year, that's a very bare minimum decline of just about 1%, as you can see. So that's why detached and duplex homes are not really going down as much as row and apartment style homes. As far as the semi-detached price goes, we are at $687,200, and that is a decline of $10,300, and that is a complete reversal of what we saw last month. So last month we saw positive gains in the duplex market because certain communities which had duplex homes were seeing a lot of demand and managed to get those sales that increased the price. But now overall, the duplex home has also corrected in the other direction. However, year over year, duplex homes is the only one from August to August that has maintained positive gains of about 1%. Row style homes are at $439,600. Month over month, we have dropped by $6,600. And overall, year over year, we are almost at a 5% decline. Apartments being the worst of it, we are at $326,500. And that's why we've seen a decline of almost 6% at about 5.8. And month over month, we've seen a decline of $3,100. So overall, all property types have essentially gone down this month. But like you can see, what I was saying is each property type is behaving differently in terms of the amount, but also the year over year gains that we're wiping out or gaining. So it is different depending on which property and which segment you're looking to get into. And of course, this varies a lot more once you start looking into specific neighborhoods and communities. And if you want those numbers, definitely reach out and I would love to give them to you. Now to take a look at the benchmark pricing by specific area type in the Calgary map. And this will give you an idea, depending on where you're looking to buy or sell, what the local impact is. Now, of course, this does not highlight specific communities, and that's the data that if you want, you'll have to reach out because it's just in too much detail. There's over 200 communities. But let's take a look at what's happening around Calgary. So for North, we are sitting now at total residential benchmark at $540,300, and that's a decline of $5,400 month over month. In terms of Northeast, which have seen the largest declines year over year at about 7.6%, it is at $490,600 and month over month declines of $3,800. In terms of East, we are at $410,200, so that's a decline of $4,400. Southeast, we are at $568,000, so a decline of $5,300. South, we are at $577,000, so a decline of $3,600 month over month. In terms of the amount of year-over-year declines, you can see majority Northeast and East are the ones that are affected. South still remains a very positive and family-friendly area for people to want to move into. So, of course, they're not going to get it hit as much. And the same goes for West and Northwest, extremely high demand areas. So you can see Northwest, we are at $635,300, so that's a decline of $8,100 month over month. And as far as West goes, that's $9,000 decrease month over month, getting us at $707,000. So of course, West still remains one of the most expensive parts of the city, and their declines are still relatively modest compared to all other areas because they hold a lot of value and desire for people wanting to move into those neighborhoods. And as far as city center goes, it's at $581,000 for the benchmark price, and that's a decline of $7,000 month over month. And year over year, that's just a decline of 3.9%. Now to get to one of my favorite charts, which is the benchmark pricing, not just by property types, but also by different areas across Calgary. And this really breaks it down. And the reason I like this graph so much is because if you're a buyer, it gives you a very good idea of the affordability and the type of area that you can actually get into, and helps you plan between the community and the property type where you can afford, because there are essentially three factors. It's location, price, and then the property type. And so you got to pick between one of these depending on what you can afford. And so for example, if you're of the mindset that you can only afford around the 400,000 mark and you're trying to get into a duplex home, then essentially you can only get into Northeast or East District. But if you don't want to get into those communities, then you'd have to move one property type down, and then more areas become affordable. Now, of course, there are a few exceptions to this depending on the configuration, because the benchmark pricing is based on a very specific criteria for the most popular property that's available in that location. But if you're looking for anything less or more, then of course the price will change. But without going too much into depth of this graph, feel free to pause the screen and take a look if this is going to be helpful to you as a buyer, to give you an idea of where your affordability is in different parts of the city. Now to look at the same type of data, but in terms of year-over-year gains. So this is for sellers, as you would have guessed by now. And this gives you an idea of the level of losses that different property types are facing based on different regions. So as you can see here, in terms of course, apartments are the ones that are suffering the most. And it doesn't matter which part of the city you're in, it's just different levels of losses depending on the amount of supply and the levels of demand that we are facing right now. As far as duplex, that's the only part of the quadrant where we are seeing some positive gains in certain parts of the city, because it's that perfect balance between unaffordability in the detached market versus also not having enough supply in the duplex market last year. So a lot of people from the sidelines and not wanting to get into the townhouse market. So it offers that perfect blend, especially in certain communities that are highly desirable and people want to get into at that price point. As far as total residential, you can see everywhere is down, and row townhouse is the other one that is taking a big hit in terms of like most quadrants across the city. And detached overall is relatively pretty stable, moderate losses, barely 1% even for most parts. There are only certain parts of the communities like Northeast and North that are not exactly highly desirable, that essentially get hit the most and get corrected, because they also did see a lot of gains over the last 2-3 years. So it's a reversal of a lot of those gains, because essentially a lot of buyers don't really prefer those areas because of certain stigma attached to it. And then other than that, the same thing applies to East and Southeast. Southeast is actually extremely positive in terms of the amount of like the type of lifestyle it offers and the amount of people that want to move here. However, Southeast is also facing extreme supply due to the amount of new communities coming more to the Southeast, and that brings a lot of competition between resale homes and builders. And so that's why Southeast will of course also get hit, but East has a completely different reason for going down, and that's just the same thing to do with Northeast. Now, to understand the exact economy factors that go into what drives the demand and supply for this market. So as far as sales go, we are at 1,989 sales this month. Last month we were at 2,099, so it's been consistently dropping month over month at about roughly 200 sales. And when we take a look at the sales for August, when we compare over the last 1.5 days all the way back to 2011, so you can see our sales are not the problem, because most people will say that the Calgary real estate market is crashing because we just do not have enough sales. You have to understand that the sales over the last 2-3 years, especially in 2023, was a complete anomaly, because that's not really your normal bracket of sales. So this is the down period that Calgary had, where the sales were not enough to keep up with the amount of inventory that was coming on the market. But the real problem right now is also still inventory, because we did not have enough inventory around this time, which led to that huge amount of price growth. But now, because inventory is making its way back to the market, it is balancing out the amount of sales that we have. And if we draw the sales across right here, you can see we are not even at the high time that we had in 2013 and 14. We only came there and crossed it in 2023. So we are just below that, and we are not really even at this entire phase, which was where Calgary had serious problems in terms of being able to sell. So when it comes to sales, I think we're still okay. It's just like the sales is distributed across different parts of the market, and it is not concentrated in areas that are dropping really, really fast. Now, when we look at new listings, you can see here we are at 3,478 listings. Last month, we were at 3,911. And the difference that we're seeing between this month and last month has been pretty consistent in terms of the amount of new listings that have been dropping month over month as we go off the hot spring season. And that has resulted in an inventory of 6,661. Last month, we were at 6,917. So we are leveling off. We are pretty much balanced in terms of the amount of inventory that we are able to hold on the market. And what's going to happen from now on, and this is my prediction, is that a lot of the good properties, since we're seeing lesser and lesser new listings come onto the market, lesser people want to move as we get into the winter and the slower months of the end of the year as far as the real estate market goes. So all the best properties and well-priced properties, or properties that have been on the market for a bit and just absolutely need to sell, will go first. So the good ones will go off the market first over the next 2 months. And then as we head into winter, so the last 2 to 3 months of the year, that when we have an extreme slowdown both in sales and new listings, what will be left behind is all the properties that did not sell. So somewhere in between there lies the best deals, because you can now capture majority of your points in terms of the things that you're looking for in a home, but then also negotiate down the price based on where the market is trended and get ahead of the market with that good property. And chances are, if you come late December or maybe in Jan, there's going to be a lot lesser options available. And in terms of week over week, you're not going to see a lot of good properties which actually hit all those points that you have in terms of criteria when shopping for a home. So that is overall what I see happening in terms of the trend for buyers and sellers going forward. Taking a look at the inventory over the last 1.5 decades, so all the way back to 2011, you can see our inventory has climbed up significantly, and that's because that's the huge amount of new listings that we've had come on the market, but the sales have absorbed a lot of it, but not enough for the amount of new listings that we've had. And so that brings us all the way back to 2011 levels, and even to we're not even close to, I would say, 2018. But it is concerning that the inventory levels are around the 2016 levels, because right from here to here is where the Calgary real estate market didn't have a great time. And a lot of people I know who bought apartments in 2014 still haven't seen positive gains even till this day. Now let's take a look at the summary for each property type by the Calgary Real Estate Board. And depending on what property you're trying to buy or get into or try to sell, these stats will be more important to you. So right here we can see detached home sales have eased to 995 units in August, while new listings actually rose to 1,748 units. So this keeps the sales to new listings ratio below 60%. So still in the balanced market. This prevented any significant shift in inventory, as 3,051 units were the highest levels we've ever reported in August since 2020. Districts like Northeast, North, and East are experiencing buyer market conditions. And as far as price declines go, Northeast and East District are at 5%, while prices in City Center were over 2% higher. So again, when it comes to detached properties, depending on which area you look at, it is dramatically different. And you should know that even when you're looking to put an offer, how to price the property, and depending on what has sold in the area. Or if you are a seller, and this is the biggest problem I'm seeing right now, a lot of sellers are pricing their properties wrong, and unfortunately are sitting on the market for a long period of time and are seeing price declines over and over again. It's just very demotivating, and then unfortunately at the end it just doesn't make your property look good, and you have to then settle for what buyers do come into the door 30-45 days later down the line. Now to take a look at duplex homes, you can see here August sales have improved over last year's levels, but it was not enough to offset earlier pullbacks, with year-to-date sales at 1,557, which is 8% below than last year, but higher than longer-term trends. Listings slowed compared to sales, pushing to sales to new listings ratio up to 67%, and preventing any further monthly inventory gains. So that is actually a very healthy percentage, even higher than what we are seeing in the detached market. So that's a good level of demand in terms of the sales to new listings ratio. The months of supply have actually remained below 3 months in August. In August, the unadjusted benchmark was 687, down from last month, but nearly 1% higher than last year, and nearly 4% higher on a year-to-date basis. So duplex homes are actually still doing really, really well right now, and it is the perfect in-between option, like I was saying, for a lot of buyers who are trying to get into that affordable market without having to take on either too much risk or having to settle for a multifamily home like a townhome or an apartment. Now, largest year-over-year gains occurring in city center. Meanwhile, the largest declines have actually occurred in Northeast, East, and North districts. So pretty consistent across all property types where the losses are really happening. Now, when we look at townhomes, sales in August slowed, contributing to the year-to-date decline of about 16%. So new listings did ease in August compared to last year, and last month they have generally been on the rise, pushing up inventory levels. Due to the relatively strong sales, the months of supply has only pushed slightly above the 3-month mark. So the sales are there, and that's what I'm saying, but it's just the amount of listings that we're seeing come on the market, in contrast to what we've been used to over the last 2-3 years, is what's driving this dramatic shift. So far more balanced market than last year, but not as high as the 6.4 months that we saw back in 2018. And that is a very, very difficult market to be in as a seller. If you are trying to sell a townhome when there are 6.4 months of inventory, there's extreme competition and just significant amount of price drops and adjustments that need to happen. Right now, as we said, just about 3 months, it perfectly serves both the buyers and the sellers, because the sellers need to make that effort to market their property correctly while providing value for the buyers at the right price, and then the buyers do not feel rushed but have the time to pick the property that best suits them. So the unadjusted benchmark price in the city was $439,000, reflecting the 4th consecutive month decline, nearly 5% lower than last August. And when we took a look at apartments, sales continued to slow in August, contributing to a year-to-date pullback of nearly 30%. So as you can see, apartments is really having the worst of it all. While sales are still above long-term trends, they have not been high enough to offset the level of new listings in the market. In August alone, there were 877 new listings compared to the 449 sales so this keeps the sales to new listings ratio relatively very low at 51%. And that puts a huge advantage for the buyers in terms of the amount of options they have available. And unfortunately, it is difficult for sellers to sell, although I am still seeing a lot of apartments sell pretty fast, but it is only the ones that have the most value to offer. So, for example, the one that have condos with really good amenities, very low condo fees, good areas that do not have an opportunity for a lot more multifamilies to come around because the development land is finished. And it's kind of geared towards that versus places where there's a lot of construction, a lot of new builds coming around. Those are seeing and struggling to actually be able to sell. Now, the months of supply for apartment condos have remained about 4 months since June, and the benchmark price was $326,000, reflecting the 5th consecutive month that we've seen declines, so nearly 6% lower than levels that we reported in last August. Year-over-year decline of about 5%, slightly higher than the rate of decline reported in the West District at 3%. Meanwhile, the highest price declines occurred in Northeast District at about 11%. So as you can see, just within apartments itself, It is really diverse in terms of the experience that sellers are having and where the demand and supply factors are playing very, very different. Now, finally, let's take a look at the total benchmark pricing compared to the amount of inventory and sales that we have across the city for the past couple months and a year. So as you can see, the benchmark pricing has been consistently declining as far as the total residential benchmark goes. Of course, you know by now that this varies depending on property type. And we peaked our inventory right around here. So that was back in June. And as far as July goes, we had a slight correction on inventory as the new listings dropped. But now the sales has pretty much started balancing out too, and has held steady right here. I was actually expecting the sales to drop quite a bit more, and that might happen next month. But so far, when you look at the difference between, for example, going from May to July, has been quite a bit down versus July to August. So that's been holding steady versus compared to the amount of inventory that's been left is also dropping. So that is going to put some pressure on certain property types in certain areas as we stop seeing new listings come for that. But I do expect that we will continue dropping down right here, and then potentially for the fall market, we do see some buyers come off the sidelines, and that's already what I'm noticing in my business. So I don't know if that will still be enough though to just have this go sideways for a bit, something similar to what we saw between around December and Jan, where prices just hold steady and don't keep dropping like this. And then when we go back into the November, December months, that's when you will start seeing these declines again. And it's just about understanding where these balancing factors between demand and supply is going to end up when it comes to heading into 2026. I do think as a lot of the fears have been wearing out. So initially at the start of this year, we had a lot of uncertainty around the tariffs, and then things became around the elections and the taxes, and now with the carbon tax coming back in a different form, just a lot of things in the news that has just been grabbing people's attention as far as the job losses in Ontario and now job losses in Alberta. It's just different factors pushing things in different directions, and it's a very, very complex sentiment to navigate through. But with the amount of inventory that we have left, and considering that the job market does hold steady going into next year, I expect some gains as we find a balancing point out here. We'll, I think, have a short spring market again, hopefully a little bit longer than this year, which barely held for, I would say, maybe 2 or 3 months. Not even 2 months. We've only had 2 weeks of proper gains, this even though the total residential benchmark price went up. So hopefully it's a bit longer than that, and then we see some positive gains. I don't think we will hit these levels again. So we might actually be hitting lower highs, and that would just mean that we head into a more sideways market when you zoom out and look at it from a couple years perspective. But that is what I expect going forward in terms of trends. And something I always say is like, when in doubt, zoom out, is because if you look too closely on a month-to-month basis, you can end up over analyzing certain stats, and you just have to understand what your longer term risks are. And I've made certain market videos about this, where depending on which property type you're looking at, the risks can be very, very different, because different property types behave very differently in downturns. And if you're a data person, definitely reach out. I can provide those to you. But looking at the total residential, as you can see here, the benchmark price over time. So as far as the benchmark price, we have dropped right here in the second half of 2025, and I continue to expect us to go down a little bit more. But when you take a look at the people that entered the market in 2021, the amount of gains that they've already seen, and there is absolutely no way that we are going to reverse or correct all of this. I expect us to end up probably somewhere in the 550 mark as we head sideways, probably even correct down to maybe like a little bit 525 at most. And then certain property types will do really well versus others won't. And the total residential benchmark price, of course, will face the brunt of certain property types, such as apartments, not doing very well. But as far as how concerning is it really for a lot of people in the market right now, especially those that got in the last 3 years, these losses really don't matter. So to put things into perspective, Calgary real estate market has seen significant gains over the last 3-4 years, and a lot of people have a lot of cushion in terms of the amount of equity in their property. And so just to talk to what I see sometimes online, people talk about people have to bail out on their property, or they're not going to be able to make payments, delinquencies, all of that. That's not really a very real situation for Calgary. Of course, there are people that have bought their property prior to this and then they have made even more money. But as far as what Mississauga, for example, GTA, Ontario are going through, a lot of those people they have ended up over leveraged because they already saw the cycle. They took that money out, started putting into other properties and stacking those cards. And so those are getting reversed. But as far as Calgary goes, and that specific concern of bankruptcies or anything, I'm not really concerned about that happening. So I don't expect a huge surge of supply or inventory to suddenly happen as a cause of that. All the inventory that we are going to see come on the market is because the inventory didn't come in the last 2 or 3 years. And a lot of people that now have to move or look to move out of Calgary will be looking to sell their property right now. And so that's what I expect going forward. Thanks again for staying till the end. And hopefully this market report was extremely useful to you, no matter whether you're a buyer or seller. Now again, my links are in the description. Reach out for a free consultation call. The QR code is right here. If you scan it, you'll be able to book the call in less than 30 seconds. And make sure to get your community guide and the buyer guide, which have been extremely useful to all of buyers that have downloaded it. And thanks for sticking to the end again. And if you're not subscribed, of course, subscribe to stay and watch videos like this so you get updated on the Calgary real estate market. And I'll see you guys in the next video. Till then, take care.